Mark, it sounds like you would agree that at least if you look at a 2-year stack, certainly Meta's revenue growth remains pretty resilient.
I think that's right, Carl. And I think this is a really key critical point for investors. If you look at the reported revenue growth and you put it in a vacuum, you see this dramatically slow levels. But, you know, we had this extreme event 2 years ago that created COVID that created these wild comps. So a year ago in the June quarter, Facebook's revenue growth was well above 40%. You have to factor that in when you're looking at what the growth is like in the June quarter. So if you do that, you see that the revenue growth has been very consistent, very robust. It's impressive. There's not the dramatic slowdown that you would think of if you just looked at the reported growth number.
Right. Do you think the market is going to be as tolerant in the future now of the investments that Metaverse is going to require?
So I think there were 3 interesting changes that Facebook made in this earnings call, and explains why the stock's up double-digit percent. The last quarter and the quarters before that, it was we're going to spend on Reality Labs and Meta, the future metaverse, regardless of what happens to the rest of the P&L. This time, Zuckerberg went out of his way to say that wouldn't be the case. And in fact, they then lowered their OPEX growth, their operating expense growth for the year. That was really important. The second thing is last quarter, it was all about TikTok fear. If you listen to management commentary, this time it was about TikTok confidence. They think that they can create a compelling alternative. And the third thing is last quarter, they complained a lot about the Apple privacy changes, how it was dramatically negatively impacting their business. This time it was confidence about their ability to recreate the ad tech stack. Night and day difference in the tone, and that helps explain the stock up.
Yeah, they've done that over the years, Mark. Really expert at under-promising and over-delivering, taking the hits and then beating them later. Mark, just on the broader ad landscape, so much has changed over the last year in light of Apple's iOS and privacy changes. And I wonder, what do you think, who is the new landscape set up for? You hear both Google and Facebook talk more and more in their calls in the latest quarter about using AI and machine learning in their technology. Do they maintain their relative duopoly in this environment?
My guess is that they do, Deirdre. You know, it's the company with the most data and the best application of technology against that data that wins. And so if you have invested years in AI and machine learning like Facebook and Google have, you're probably going to be the first to figure out a post-privacy ad attribution model. Look, there are a lot of headwinds here facing advertising models. Why I like Facebook so much here is that I think you're going to have revenue growth acceleration as we hopefully move beyond the Ukraine at some point, hopefully move beyond macro at some point. And then they solve the ad attribution model problem that was created in part by Apple. And then they start monetizing Reels. Like, there are 3 major revenue growth levers here. They're staring us right in the face. Have they executed against them well yet? No. But, you know, give this company enough time, 6 to 12 months, you're going to see that revenue growth reaccelerate, and this stock will not stay at 13 times earnings. It's one of the best assets you can buy right here, right now in consumer tech, I believe.
Mark, good morning. Again, it's John. First of all, I mean, nobody wanted to hear this 3 months ago, but my argument is maybe Facebook's not fundamentally broken, right? The bull case is still somewhat alive, whereas the bears 3 months ago were like, oh, Facebook's falling apart, you know, it's not working anymore. This quarter, doesn't it, argues that the fundamental things that were strong about Facebook in the past, maybe not every revenue knob being turned, maybe not every expense being tightly managed, but the fundamental assets that Facebook has are still protected and they can still grow off of them, right?
John, I completely 100% agree with you. This is a classic DHQ stock in my book. Dislocated, high-quality asset. Look, it's still the leading global streaming media social media asset in the world with the 2 largest messaging applications in the world. And there's a lot of that's on the come here. Now, they got to monetize Reels. They did it with Stories. I bet you they do it with Reels. They got to figure out this post-privacy ad attribution model. They've got the scale, the technology, and the resources to do that. So that's still all on the come. And then they've got a business model that still generates $30 billion a year in cash. So they've got plenty of firepower to invest and firepower to return that cash to shareholders. It's a growth story with a really nice value underpinning. And again, you can get this at 13 times earnings. It's this rare air territory for a growth investor. This is what you look for.